Zillow just abruptly revised down their home price forecast for 2025 in response to deteriorating market conditions. And in fact, Zillow is now predicting that home prices are going to go down in over 200 cities across America in 2025. In this video, I'm going to cover these new Zillow home price forecasts and why the housing market is rapidly declining right now. To start with, you can see Zillow is now forecasting 2025 price declines in 204 cities across America. Some of the biggest cities where they're now forecasting these declines include New York, Houston, San Francisco, Denver, San Antonio, Sacramento, Austin, and San Jose. And the reason they're doing this is because home buyer demand just declined by even more to start the year. The buyers are out on the housing market. They have no interest in buying homes at these sky-high prices, and now the inventory is exploding. With Redfin reporting that the months of supply on the housing market has now hit the highest level in 6 years. This is a metric that tells you how many months it would take for all the homes on the market to sell given the current monthly sales pace. A lower number typically favors sellers, while a higher number typically favors buyers. And in some markets, the months of supply is absolutely exploding, especially in Florida, with the same Redfin report identifying Cape Coral, Miami, Fort Lauderdale, West Palm Beach, Northport, and Jacksonville as some of the markets where this months of supply is now highest. And what I'm going to do now is a rapid fire round where I take your suggestions, your housing markets you want me to look at, and I go through them one by one in this months of supply metric from Redfin. The first cities you all requested were Los Angeles, Orlando, Seattle, and San Diego. Starting with Orlando, where the months of supply has now spiked to 5.4 months across the metro. That's the highest level in 8 years and almost double the long-term average. Moving on to Los Angeles County. You can see there's now 4 months of supply in Los Angeles County. It isn't as high as Orlando. However, it's still above the long-term average, suggesting we're seeing slowing in LA's housing market. With a similar trend taking place in Seattle. Seattle only has 2 months of supply on the market. It's typically a fast market, and it's above where it was a year ago. We're also seeing San Diego's housing market start to weaken. We're at 2.7 months of supply in San Diego, which is the highest level we've seen since 2019. Higher months of supply means it's more likely that prices start to drop in your market. However, there's big differences across cities and states in America. There's some areas which are in a heavy buyer's market and where prices are going to drop in 2025. Meanwhile, there's other areas where prices are going to continue to go up. With data on Reventure App showing that there's still positive home price momentum in the Northeast and Midwest, particularly in states like New Jersey and Connecticut. Reventure App is forecasting that prices are still going to increase in these states, while we're forecasting that they're going to go down in many of the states in blue, like Tennessee, Georgia, Florida, Texas, Colorado, Utah, Arizona. Reventure App thinks prices are going to drop due to the big buildup in inventory and months of supply. And what I think is really interesting about these reports from Zillow and Redfin and the data on Reventure App is it's becoming apparent that most of the housing market mainstream is now acknowledging that there is a housing downturn. This is the big shift that's occurred in the beginning of 2025, where more and more of these news outlets are saying, yeah, folks, home price growth is going to slow, the buyer demand is down, and I'm kind of actually wondering what's now going to happen in the housing market, that the narrative is officially shifting into negative territory. I think this is going to burst a lot of the bubbles out there in local housing markets. A lot of the sellers that think their house is worth way more than it is, they're going to be reading these reports from Zillow, Redfin, Wall Street Journal, and they're going to start to say to themselves, oh my goodness, it's a bad housing market. And one market that shifted down in a major way is Phoenix. This graph is looking at the months of supply in Maricopa County, the main area in Phoenix. We're up to 4.9 months now in Maricopa County. Prior to the pandemic, we were only at around 3.7 months. So we have a massive surge in inventory relative to sales in Phoenix, which is now starting to be a drag on home value growth. Another area where this is the case is Austin, Texas. Look at this graph, everyone. Prior to the pandemic, there was only around 2 months of supply in Austin's housing market. Now there's 6 months of supply, 130% increase, which is why prices in Austin are down by 20%. But this one might be the craziest graph of all, everyone. This is the months of supply in Broward County, Florida, which is Fort Lauderdale. We are now up to 10 months of supply on the market in Broward County. That's more than double The long-term average during the pandemic, it was only 2 months of supply. So we literally have 400% more supply in Broward than we had at the peak of the pandemic, and we have the highest level of supply going back to the last housing crash. And in just a second, I'm going to take more of your requests on this data so we can cover more housing markets. But first, I just want to acknowledge how crazy these figures are, everyone. In some parts of America, there is a fundamentally large housing downturn occurring as we speak. The fundamentals in the market have really deteriorated. There's a buildup of inventory. No one's buying homes. Sellers are cutting prices. Days on the market surging. But to a lot of you guys out there who are buyers, I know for some of you, it might not seem like there is a housing downturn occurring right now, because I know some of you still go on Zillow or Redfin and you look at houses and they still seem really expensive. So how do we square these two realities? That on one hand, the fundamentals in the market are crashing, but that prices haven't crashed yet. And the way to understand that is that the housing market operates with a lag. It takes time for the fundamentals in the market to filter through to prices. After all, only 5% of all the houses in America sell in a given year. The housing market operates in a very slow way. The volume's really low, so it takes time for the price discovery to filter its way through to the new listings and to the sale prices. However, one area where that price discovery is taking place very rapidly is Florida's condo market, everyone. The condo prices in Florida are in free fall. For instance, I want you to take a look at this listing. This is a 3-bed, 2-bath condo in St. Petersburg listed for $585,000. Just take a look at this, everyone. The Florida Association of Realtors is now reporting that there's 9.1 months of condo supply on the Florida housing market right now, which is absolutely wild. This is the highest level of inventory we've seen in Florida's condo market going back to the last crash, and it's not even close. You can see that they're saying that the median sale price of condos is down 2.3% year over year. However, when you look at certain listings, the drops are much bigger. For instance, this is a 3-bed, 2-bath condo in St. Petersburg, Florida, where the sellers cut the price 51%. This is actually a really nice unit in a good part of St. Petersburg that's kind of a steal at its current list price, and it's even listed for about 20% less than what the owner bought it for in 2020. So there's massive price cuts here, but it's still not selling due to the HOA fee. Look at this, everyone. HOA fee, $2,300 a month. So if you were to buy this condo with a mortgage, your estimated payment would be $6,700. Meanwhile, take a look at this condo in Winter Park outside of Orlando. It's a 1-bed, 1-bath listed for $90 grand. Oh my goodness. Huge price reductions in market value on these condos. Yet why is that happening? Look at this. $2,000 a month HOA fee for a 1-bed, 1-bath condo. Your overall monthly payment would be $2,600 a month, when you can rent the same condo unit in the same community for around $1,200 a month. And so this Florida condo crash is just getting started and will likely continue in 2025. However, now let's get back to your requests. So I made this post here asking you guys what cities you wanted me to cover on my post board. Looks like we got some new entrants: Denver, Sacramento, Houston, and Melbourne, Florida. Well, in Denver County, everyone, take a look at this. The months of supply is up to 3.7 in mid-February. Prior to the pandemic, we were more like 2.5. So we have a huge surge in inventory in Denver. The prices there are now starting to drop, probably going to drop by more this year due to this months of supply. Now in Sacramento County in California, it's a bit of a different story. Months of supply has gone up a lot and it is in a seasonal peak, but it's not as high as some of these other markets. So I think Sacramento is an area that's going to slow in 2025. I don't think we're going to see a crash here this year. Maybe the price growth starts to go negative towards the middle to the end of the year, but we still need to see some more inventory before that happens. All right, what about Houston? Do we have a problem? Yes, we do. Months of supply in Harris County in Houston is now up to 5.1. That is the highest level in the last 8 years. Again, this months of supply takes the inventory and divides it by the sales pace. This is an apples to apples indicator of the supply demand dynamics in the market, and it's telling you Houston is starting to trend down. But I want to revert back to Zillow for a second, everyone, because Zillow's price forecasts are really interesting to me. Typically, Zillow is much more bullish on the housing market than, say, I am or other forecasters. So the fact that they're now lowering their forecast in abrupt fashion and forecasting negative price growth in so many different cities is a massive warning that you need to pay attention to. So as you can see, Zillow just had this news release a couple days ago. They're saying that their latest home price growth forecast in 2025 is weaker than previously expected, and they're now forecasting values to increase nationally by just 0.9%, a drop from the previous expectation of 2.9%. The reason they're making this change is that new listings were higher than expected out of the gate and that inventory expectations were revised higher. This has been putting downward pressure on their price forecast. And again, you can see these areas where Zillow is now forecasting declining prices year over year in orange, and they're forecasting declining prices for around 1/3 or 30% of the large markets in America. And actually on an individual level, I don't agree with quite a few of these forecasts. Like the fact that Zillow is forecasting declining prices in New York is kind of crazy to me. As you can see here on Reventure App, we have a stable price forecast, actually an upward forecast in New York. We're at a 55 out of 100. The reason why is because inventory in the New York metro is still near record lows. So with inventory this low, I don't see how you would have a decline in values. Similarly, Zillow is forecasting values in Miami to go up 2.5%, which is insane given how high the months of supply is. We here at Reventure App have Miami as a 42 out of 100 on our price forecast score, which is definite downward pressure. And we see this downward pressure most acute in Broward County, Fort Lauderdale, and Palm Beach County, West Palm Beach. Zillow is also saying prices are going to go up in Phoenix, which to me is laughable. Reventure's price forecast for Phoenix is a 40 out of 100, where we have an absolutely massive spike in supply and a huge increase in DOM. Prices in Phoenix are likely to drop this year. But let me show you the forecast from Zillow that I disagree with most on this list. Cape Coral, Florida, Zillow thinks is going to be plus 0.9%. Take a look at this, everyone. Prices in Cape Coral, according to Zillow's own data on Reventure App, are down 6% in the last 12 months, and the inventory continues to go up like a hockey stick to the highest level in a decade. Meanwhile, the months of supply in Lee County, Cape Coral, Fort Myers, is up to 11 months, according to Redfin, the highest level in a decade. So I think Zillow has some work to do on their individual market forecasts. A lot of them don't make sense. And I just wonder sometimes if Zillow releases these forecasts and tweaks them based on what they want to show to realtors in certain markets. Like they don't want to show realtors in Florida that prices are going to drop. So they're always going to show them going up. Meanwhile, the data is just so clear that prices are going to drop in these markets. So I'd actually be curious from someone from Zillow, if you want to reach out to me, I'd be happy to talk to you about these forecasts and also show you how I build my forecasts. Because actually in 2024, the Reventure App forecast was 2 times as good as Zillow's forecast at predicting price movements in the large metros around America. You can see here the Reventure forecast for prices from 23 to 24 had a 74% correlation coefficient, whereas the Zillow forecast from 23 to 24 only had a 30% correlation coefficient. And I want to report actually some great news to you guys out there, and I actually have to thank some of you for your help on this. I finally got access to my X account back. So as some of you might know, I got hacked on X and I lost access to my X account for like 2.5 weeks, and I was not able to log in. I couldn't post. I have over 126,000 followers. Some big people follow me, Eric Trump, and I wasn't able to post, and I wasn't able to actually get in contact with anyone at X. However, I posted a video here on YouTube and you guys helped me out. You guys messaged X support and I got my account back. So I really appreciate that. And actually one of my most recent tweets, everyone, was an interesting one. I showed a graph here on how housing inventory in Washington, D.C. is exploding. We're now up to over 2,000 homes on the market in the District of Columbia. That's the highest level of inventory in about 10 years in D.C. You can see a huge surge in last year. There seems to be a sell-off taking place in D.C. over the last 6 to 12 months, intensifying probably now in February with all the government layoffs. So this will be something to also watch in 2025 is the D.C. housing market. And if you guys want to track the housing market in 2025, there's really only one way to do that. Head to www.reventure.app to see what this price forecast score is for your city and zip code. The closer it is to 0, the more likely prices are to drop.